I mentioned previously that I would be making a video where I'd only go through a ton of Forex pairs and just test my strategy and see which one works best for me. And that's what's going to happen today. So I got five or three, five, yeah, five Forex pairs I want to go through and test. Just stuff I've read about and seen on YouTube that are liquid, popular, different types of price actions, uh, different types of respects in terms towards like technical analysis versus fundamental analysis versus order flow and all that kind of stuff. And to talk about the previous videos, I don't know why those took so long to upload. Like, I kept scheduling them to upload like 2 days ago when I initially recorded the video for the 21st and the 22nd on the 22nd, or well, I think that was the 21st actually. And I don't know, I mean, today's the 23rd and I was trying to upload those and they kept getting canceled and like restarting. So I just last night I just kept my computer up running the whole time. Like, I didn't even close the computer or anything. Like, I know you're not supposed to let the computer sleep, and it wasn't sleeping, but it kept like canceling the downloads. And so yeah, I'm sorry if that was late. And just for myself, like, those should be up already. But for today's video, we're gonna be going through and testing these pairs. So for my availability with the way I'm gonna start working, I'm only gonna be able to trade between 11:30 Eastern time and 12:30 Eastern time. So I'm gonna go through and test on here only those times. And with my plan currently and my trading view plan essential or whatever it is, I'm not able to go into historical data past August 10th, so like 12 days, 2 weeks worth. And so with the weekends, that's probably about like 8 days of testing I can do. And so I'm gonna keep track right here in my notes. I'm gonna write down the pair that I'm about to trade, so Euro USD right now, and I'm just gonna go through. I'm gonna write down the dates for the day I'm gonna demo trade on, and then I'm gonna see if I make a loss, a win, or I wouldn't trade. And I'm just gonna go through all these pairs here. This video is probably gonna be longer, so obviously no push to stay the whole time or whatever. Just skip to whatever pair you want to see me trade or something like that. And there was something else I was going to mention, was it? Oh yeah, my plan only uses the 1 minute. So with the 1 minute, this is as far as I can go. With the 5 minute, I could go further, but I know with that 1 hour time range I have, if I was to take only trades using the 5 minutes, they might take too long to develop or hit my execution steps before I'd have to get off and go to work at 12:30 or something like that. So that's why I'm going to be trading mainly on the 1 minute. Some people, like, when I'm actually trading, I'll be going top-down analysis through all the time frames to, mark up my biases and draws on liquidity and see order flow and stuff like that. But for now, in this just demo trading, I'm just going to be using the 1 minute mainly. Not really going to be establishing a bias, just going to be seeing what's going on. And yeah, I already have some stuff marked out, 2 drawings. Just get rid of those now. I already went and marked out some trades on some of these pairs already, but I think I'm just going to delete them all and just restart for simplicity's sake, for writing it down. So let's start. So 11:30 is right here. Okay, so let's see price action, right? Previous days, I mean, so this high right here, where's 12:30? 12:30 is right here. And I don't mind having a trade open a little later. Like into 12:30, because I can close it on my way to work, but I'm not going to be opening anything before that. So let's just see for this day's price action, just marking out the previous days, kind of draws on liquidity. Yeah, the biggest thing I can really see in terms of liquidity sweeps, I mean, we can consider this whole range here a liquidity sweep. So let's say we got these lows here, price comes trying to fill some more orders inside of this imbalance here, right? So on the leg down, we create the top of this as an order block here. Let's make this green, or let's make it purple. There's an order block there, and then we also have this swing high here before the move down, right before the big sweep up. We come, don't break structure. We're going to be assuming it's like a downtrend right now, because if we're sweeping liquidity, we're coming down, bam. So we're coming down, or yeah, we're just going to see when it breaks structure. So it comes down, doesn't close above here, don't break structure, comes down, establishing this, almost breaks structure here, doesn't, comes down, finally breaks structure here. What does it do? Creates a new low, comes up, breaks through the low, and then touches the order block. So I could have taken a trade like this, but it's, let me explain why it's not. And I could have targeted these draws on liquidity here. Probably would have gone for 1 to 2, just right in between. But this wouldn't work, because once we broke structure first here, we come down, we create a new low, and then we break structure down again. So I can't have that happening. Like, this would need to be a black candle. We can't break structure back down and touch, because then it might be a trend shift. Like in this scenario, it just kind of got lucky, kept rallying in my bias for whatever right now. And also, I mean, this shit isn't considered liquidity sweep. I mean, like, let's be serious. Like, this should be a downtrend. We should be breaking structure up. We're already in an uptrend, so we're not really breaking structure. And some people consider breaks of structure like in the same direction, where price closes already on the previous swing high. But I'm saying like what some people might call a change in character, like where we switch directions of our trend. But yeah, I wouldn't take this trade. This is kind of just here to look at. But maybe this would be something here. So we create a bam, touch liquidity here, create this order block, create this swing low. So what do we do? Come in, right? Bam, bam, some price action developing. Come through, break structure here once off this candle. Break structure again here. Create a breakaway fair value gap. Let me see. It's actually almost was a decent trade. I think I marked this out once. Bam, came through. And I don't know, this is something I wrote down in my notes. I don't know if I'm still saying that I'm going to consider the order blocks to be the leg up or down directly before the highest point. So the order block will be this green candle in this case, the move up before down, because this is the highest point on the trend. Because some people might come in and say this is the order block, like this green section here, or the top of this wick, because that was the move prior to the down. But you don't know which candle is going to be the down one, but you do know which one is before the highest high. And that's still something I'm testing. Like in this case, I mean, it wouldn't have worked either way. We broke structure here. We didn't retest this order block off of this move back up, but we already created a new high and then broke structure back up. So that would have been invalidating in my strategy. And in here, we come in, break structure through here, and then price comes up, just touches the line that's the top of the wick of the order block, but I'm not considering that an order block. I want to be very strong confirmation that the order block orders are getting filled. So I'm going off the open or close of the first candle in the order block's direction. So obviously we don't retest that. And then 12:30 hits. So let me put that in my notes. August 11th, 2025. No trade. Okay, let's see. August 12th, 2025. It's a Monday too, so we're starting right in the week, which is good. Okay, so bam, bam. Let me clear all these indicators or drawings. So 11:30, right here. Okay. So we're not exactly sweeping liquidity here, but we are creating a new high, most high, or whatever. So I'd consider this a point like almost liquidity sweep, because I mean we created a high. Let's see if that point was touched anywhere along here. So we got this high, this high, this high, this high, this high, this high. These high right here in consolidation, and then that ain't shit. But oh my gosh, the price actually breaks through higher than any of our data can reach. So let me just delete all these. So yeah, we don't sweep liquidity, but we create a new high. Where's 12:30 on here? 12:30 is over here. Okay, so let's see what happens. Leg up, we create an order block. We see a big move down. We break through our swing low. Bam, break through. So we break structure down. Come in, retest this order block, which at this point I would have had an order here like this. Stops. In this case scenario, my stop would either be at the top of this imbalance or at the close here. Realistically, probably at this close here, depending what I'm targeting. I'd probably target these lows realistically, and that's not a 1-to-2 ratio, so I'd probably move it a little bit above this imbalance until it's at a 1-to-2 ratio. I could take partials here, also target here, and then take partials here, which we can see price kind of bounced off of once it was near, and then yeah, come through, touch here, would have hit. But let's be realistic, I would have probably done a trade like this. So we come in, touch here, let's see, do we hit equilibrium? Don't hit equilibrium, but we do fill this fair value gap here. So we got two confluences. We have an order block, a fair value gap, and we get a break of structure, which is the third, and a retest. And then do we get a breakaway fair value gap? No, we don't, but we get a consolidating fair value gap, where the third candle in the pattern consolidates and the price reseeks, fills the imbalance, breaks down. We don't have a breakaway fair value gap until this point here, but I would have been out of the trade by then. I would have cashed out here. Probably once price I feel like after this candle close and I saw price trend down after here, if I was targeting these lows, I would have moved my stop to break even, probably around the top of this imbalance here. But yeah, let me write that down. W trade. So I'm gonna write down one trade, one as in not like one O-N-E, but one like W-O-N. One a trade, 1 to 2.03 risk to reward, and then the risk was, so I'm gonna say 3.4 pips to 6.9 pips. So I'm gonna put a check mark next to it so I can see easier. Okay, August 13th, 2025. Let me clear. Here's August 13th. 11:30. Bam. 12:30. bam. Okay. So what happens? We got all these highs here. Here, liquidity sweep, breakthrough. What do? The leg up before the leg down, or the move down. So here's the order block. Here's a swing low, because it's the move before the bearish candle at the top. This could have also been an order block, but then we would have been black to green, bam. Would have broke structure here, wouldn't have retested it. So it would have failed if we used this as an order block. Here we come in, create a low, break through the low. So there's one break. Create another low. Another low here. Don't break structure on this one. Broke structure, so we're uptrend. Here, bam, 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 bam. Broke structure off of this candle here. New low, new low. Break our candle that we wanted to initially see here, but we don't retest this order block. Here's another thing I was talking about though. Do we consider wicks a break of structure? Because if we were using this as our order block here, down, up, the up before our down, we would have had our order block here, our low here. Price would have broken the low, closed here, and then retested our order block. Retested our order block. Stops a couple. Bro, can I switch to the fucking so stops a little bit, stops here at the top of these highs, and target this low here, right? So we would have came in, would have broke structure, filled our order block, hit equilibrium. So that would have been, and then an inversion fair value gap here. We break this fair value gap. It becomes a point of resistance and breakdown. That's also one of my strategies, or one of my trading plans. We break through an inverse fair value gap, retest the inverse fair value gap as a normal fair value, and then break down. But I'm just gonna stick to one strategy. Well, I don't even know. I could have taken another trade here off of this one, but I was saying earlier that, you know, the big move up, or the move up before the highest point, is the order block. But if we consider this an order block, it would have been a winning trade. So what am I supposed to say? Do we count that? I don't know. So that's just fuck with my strategy. But I think in terms of this, like, this is a price imbalance. This is a huge price imbalance. Open, wick, don't even wick down. We just blast up. So I feel like if I was actually taking this trade, I would not have considered this imbalance a valid fair value or valid order block because of its very high buy side pressure. And maybe that's what would make it a good order block, because it's where a ton of sells can be filled. But if I was if we look at our previous example, yeah, I should have left the lines there, but the order block wasn't like a huge imbalance. Like, it was kind of like something like this that had wicks and whatever. So maybe I should say in my trading plan, the order block can't be a big imbalance. Because if we look here, because I already see a winning trade down here, I can just see this shit. We're moving down, create this swing high, create this order block. Price comes up, closes above the swing high, so we break structure up, retest our order block, and then bam, we come up, targets could have been at the top of this fair value gap here, stops under here. That's probably a 2-to-1 trade right there. But what can we see? The order block isn't a fat imbalance. It's 2 candles with 2 healthy wicks. But if we look at this, I mean, this just looks like some sort of manipulation. It doesn't look like standard like retail movement. So maybe that's just something that I'll have to learn with market experience. But I'm gonna say for today, I'm not gonna consider this. Let's say I got on the chart like I got on the charts a little late. All right, so we come in, I see these lows, see this break of structure here. But this is something to consider. Here, I'm gonna write this down. We don't consider the leg down / up before the liquidity sweep and order block if it doesn't have healthy price action and wicks. Wrote that down in my rules. So that's something we can study now and we can see in future trades. But in this case also, the wick would have counted as a break of structure and it would have worked. So I'm seriously considering wicks as a break of structure. I just think that maybe if I was entering a position like this, I'd lower my risk to rather than like 4% of my account, I'd use 2% of my account because it was only validated through a wick and not a close. This one I would have used full 4% because it closed above and it wasn't just a wick. So I'm gonna write that down as well. When we wick above a swing high / low to create a break of structure, I just lost my train of thought. When we wick above a swing high or low to create a break of structure, we use less risk if we take a position than normal because less bias confirmation in our favor. That's rule 5. Well, that's for Euro USD. It might be different, but I'm liking it so far. This would also have been a good take profit range. This kind of up, down right here. So let's see. So we break structure, retest. Let's grab my tool. Retest. Create this trade. Target inverse fair value gap 1. Ooh, that's not a good R&R though. Well, I usually put my R&R at the close or open of the lowest candles. Still not our 2-to-1 R&R, but so look, this high is perfectly where this inverse fair value gap is. So that's exactly where I target probably. I don't like that risk to reward though. This is where I lower my risk. I lower my risk if it's not at least a 2-to-1 to R&R as well. I'm gonna write that down. Lower risk if not at least 1 to 2 RR but still good confirmations. But I mean, let's be realistic here. I know I'd be wanting to target a 2 in R&R. So let's say I put it at 2. We still would have gotten filled, which is good because I know if I was actually taking this trade I would not put it at 1.7. I'd put it at 2 R&R. So I'm just glad 2 R&R wasn't like right here where I barely get stopped out. So I know if I was in real life actually taking this trade, I would have done the 2 R&R. So I'm going to write this down as a dub. 1, the trade. 1 to 2 RR. 1.8 to 3.6 pips. Alright. August 14th, 2025. Let's move on. $11:30, $12:30. Alright, let's look. Fat bearish trend, bam, 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 bam. Don't ever break structure up. Boom. Create this swing high, this order block. Price breaks structure up, closes, comes down, retests our order block. Trade taken. Stops at the close of here, close of these lows. Target would have been probably the top of this inverse fair value gap for a 2.13 R. Stops might have even been, nah, they wouldn't have. Here, top of this inverse fair value gap. Probably would have taken partials at these highs. Partials at these highs. Create a breakaway fair value gap. Here's a fair value gap. And then this candle's close is above this candle's wick. So at this point, I would have moved my stop loss to break even. Let's say I don't take partials here. I'm aiming for that 2.1, 1.23 R&R. I'm not going to put an X, but instead of a check mark, I'm going to put an equal sign, because this trade I would have done break even, because that's part of my rules. We hit a breakaway for value gap, I moved break even. Probably would have moved it at the open of this or close of this black candle. So I'm going to say 1 to 2.17 R&R. Break even trade. 1 to 2.17 RR. 3 to 6.5 pips. Alright. It's a decent trade. Good idea. Has a good idea. It's against the bias, obviously. It's a bearish market. So probably would have been looking for bears if I have more time to trade, but I don't. Okay. 11:30. 11:30. 12:30. Okay, what do we do? Price comes up. All these equal highs. Okay, touches it. Oh my god, fucking switch the tool. Touches it. Bam, highs move up. Here's the order block. But it's not healthy price action. We don't have a wick. Or actually, we do have a wick, but I don't like how imbalanced this is. Like, if we had something like this, I like that better. So, bam, boom. Here. Create this swing low. This swing low, this green, these green candles in order block, all around here is an order block, right? All this range. So I'd probably just say this swing low is the order block. Price break structure off this is a little green candle, little doji candle. So break structure here, Don't retest it, but price does continue to trend down. It could have hit these lows. Targets probably would have been here, which you can see price bounces off perfectly. But yeah, wouldn't have taken that trade because we didn't retest the order block. Okay, let's see here. Price comes down, trends up. See if my dumbass would have taken this trade. Bam, here's the order block. Here's the low. We're in a bearish trend. Okay, price touches it, comes up, breaks through. Retest the order block. Stops the bottom of this, targets the top of here. Actually stops probably would have been higher, like at the bottom of this candle here. For exactly a 2 RR. Just get barely wicked out. But yeah, touch, retest, break, nope, because we're in a bearish bias. Price consolidates the next day. Yeah, so I would have lost this trade. August 15th. Lost trade. 1 to 2 R&R. 1.6 to 3.2 pips. It happens. It happens, but it's good to know when. What happens? Price comes up, test this, liquidity is swept. This swing low, this order block. Oh my god, and look at that. This fair value gap though gets tested, retested. And equilibrium as well, huh? This would have been beautiful if it hit our order block. So come up, create this low, up, break structure down, come up, almost touch the order block, and then where would we have targeted? These lows, stops above the wicks, hit equilibrium, hit the fair value gap, almost hit the order block. This would have been a beautiful trade. And in the day, wouldn't have taken it. Maybe I should add that as a rule. If I try to take one trade and it fails, like I don't get filled, I just stop trading. Because this was last on here, I could have prevented by not trying to take a second trade. But who knows? Well, we gotta test that. Okay, what do we do? Bam, swing high right here, order block right there. Price breaks through, creates a new low, and then breaks structure down, and then fills the order block. So we wouldn't have taken this trade because create a low, then break structure down again, and well, almost break structure down, but the length of this and the way price doesn't really bounce off of these highs here down. Price creates a new low, tries to come up. Yeah, this is just, we broke structure up, but my rule is if it breaks structure back down during trying to retrace into this order block, then we don't take the trade. So look, we tried to come down. Even if it did take this trade, I would have tried to target these highs, which eventually I would have hit. But I'm not counting this as a trade. So Monday, August 18th. Oh shit, we skipped the weekend. I didn't realize. August 15th, Saturday, Sunday. It's right here. Then Monday starts. So August 18th, 2025. No trade taken. And I'm going to put a circle next to days that I don't take a trade. Got circle X's, checks, and equal signs. Okay. 11:30. Why wasn't my tool? 11:30, 12:30. Yeah. If somebody sees like it's not perfect, like I'm not trying to get it perfectly at 11:30. It's fine. Okay, so what happens? Price tests these lows, comes up, and breaks through them. Break structure, don't retest. These lows here, price comes down, sweeps liquidity. This down move, bam. Price wicks above, breaking structure, comes down, touches this order block. Bam, comes up, touches these highs. Win the trade. But I would not consider this an order block. This is just normal choppy movement. I mean, it is technically a liquidity sweep, but what did I say about the order blocks? It's got to be healthy. This isn't a healthy order block, and it's too big of an order block. If this was an order block, I mean, it's already too damn far from the point of where liquidity is swept. This is just price action. We could have considered this liquidity sweep up. Price comes out. What happens? I'm just trying to think, if I was in this scenario, would I have taken this trade? Look, up, create this order block, this swing low. Price wicks above, break structure. This candle retest, touches our order block, comes down, hits lows here. That's a winning trade. But I mean, in this case scenario, would I have taken this trade? Seeing all this previous movement, price kind of consolidate here. No crazy movement since back here. Price consolidated. Would I really have targeted here? I would have expected price to bounce right off of here back up. I don't think I would have taken this trade. It would have won, and I might have targeted here. Might have had like a tiny stop loss. So where? Here we get filled right there. Where would I have my stops? This open and close. Target. Top of here. 1 to 9. Just bump it up to 2. Would have won. 2.1 pip trade. Would I have taken it? I don't know. It depends how I was feeling. I'm writing no in the books though. August 19th. No trade taken. Okay, I see all this consolidation. Price touches it again. I would not have gone for a downtrend off of this, even though we did break. I might have considered this down here. This is actually a good one, right? So we come down, sweep liquidity, order block, up, tries to come through, don't break structure, create a new order block. What happens? I mean, if here price could have wicked up and gone down, we can't see too much information on this candle because we don't know if it opened here, bam, touched here, then came down, created this low, and then closed here. But realistically, probably opened here, went down a little bit, went up, broke structure, and then we never retested this order block. So that's not a trade taken. But then we formed this breakaway for a value gap where the close here is above this wick, brought our stop losses up. This would have been a good trade. It's a good one. I mean, I wouldn't consider this a break of structure. It's so close. If this came up and then did down and had some kind of crazy movement in here that we can't see, then I would have taken this trade. But chances are that didn't happen. August 20th, no trade. Okay. Okay. This ugly order block, break structure down, don't retest it. Price kind of goes through, breaks through this imbalance here, consolidates at the bottom of it, bam, breaks through, touches here. What do? Swing high here, order block here. Price breaks through, breaks structure off this swing high, doesn't retest our order block until a new low was created and then comes down into it. No trade. And no trade streak. No trade for the 21st. See if the 22nd can do us any better. And the 22nd was yesterday. See how yesterday was a news day, so realistically I wouldn't trade. But there's lows here, lows here. What happens? Price comes through, breaks structure. Or no, we don't. Here's the top. So break structure up, don't come retest the order block. Have highs here. Is that really a liquidity sweep though? I don't know. Here, break structure, retest order block. Already created a new high, so break structure, disrespects our rules. No trade. All right. August 22nd, 2025. No trade. So let's calculate the win rate, man. The win rate. We took 1, 2, 3, 4 trades. 2 won, 1 lost, 3 broke even. So 50% win rate. So that's a profitable win rate. 50% win rate. 50% win rate with break even, and 66% without break even. Just making my notes look all pretty. So what is that? 1, 2, 3, 4, 5, 6, 7, 8, 9. In 10 days of trading, I'd have won 2 trades, lost 1. Man, it's going to be hard to scale my account if I'm not taking a higher, because I'm only risking like 4% max, and I'm not going to be able to scale my account unless I increase risk, or unless that 4% is a lot bigger number by saving my money. Because what's $1,000? If I win 8% every win and lose 4% every loss. So what do? We take 1,000, multiply it by 1.08 times 1.08 times 0.96. So in 10 days, my $1,000 would become 1,120. So that's basically a week's work for $120. That's not bad with a $1,000 account. But do I have a $1,000 account? I don't. How long would it take for me to get a $1,000 account through my job? Probably, realistically, 2 months with the way I need to save. 2 months. Will I be live trading in 2 months? Yes. At the end, literally 2 months from now, I'll be live trading. So with the $1,000 account and my birthday coming up, so maybe some of my relatives can spoil me a little, I should definitely be over 1,000. So that's not bad. I'll take that. That's Euro USD. Let's move on. So next we got everybody's favorite, GBP USD. GBP USD. Let's go. I already have some markings on this chart, do I? 16 markings. Okay, August 11th. Okay, let's get into it. All right, 11:30. Bam, 12:30. Bam. Oh, this looks like shit. Okay, what does price do? Creates a high, bounces off that high, kind of retests liquidity a little bit maybe. I sound kind of stuffy. I'm not even sick. Break structure. This whole thing's an order block. This is just shit price action. I definitely wouldn't have taken a trade on this day. This is just buns, bro. I mean, definitely other people could have made money on this day for sure. But with my strategy, I mean, there's nothing good. So no trade. Okay, August 12th. Okay, this looks better. So what happens? Create a high, come up, retest a high. It's higher highs too, very high high. This would be a very good trade for me if it works out. What do we do? Bam, create this low, this order block. What does price do? Come in, sweep liquidity, break structure down, create a fair value gap, create equilibrium, comes back, touches my order block perfectly. All these confluences, stops right around here, top of this swing. Take profit here at the bottom of these, and take profit to here, which we would have hit both. Beautiful trade, beautiful day. Put that down. August 12th, 2025. Check mark. One trade. 1 to 2.32 RR. 3.7 to 8.6 pips. I like that. We like that. Watch me, like, if you put Euro USD alongside GBP USD and all the trades I take, watch them all be in the same direction. Because I remember Euro USD, this first one being very clean too. Like, that one was clean. Like, hit all confluences, 4 confluences. We broke structure. We retraced the fair value gap. We had equilibrium. We had the order block. Did we have a breakaway for value gap? I forgot to look. Nah. Don't have a breakaway for value gap. But still a good trade regardless. Besides, we don't need a breakaway for a value gap. It's just kind of like more of a confirmation for while we're already in the trade that we made a good decision. And also a place to cut losses, as in moving my stop loss to break even. That's what I use it for mainly. What happens? Green bean. And this is an ugly looking order block. But what happens? Tick the breaker structure, come up, touch the order block, bam. Target these lows, take them. Target these lows, we take them. Stop at the top of this wick. Target right there. 3 to 1 risk reward. So this is a point where the wick would work, but it's also a point where I'd use less risk because it's the wick and not a break. Or I mean a close. Would I take this though? Do we really sweep liquidity? I mean, we have these highs here, which is sweeps. This wick, and it looks like there's a lot of action, like a lot of resistance here. Smart money concepts don't show us shit. I don't know, I'd have to look at some order flow shit, I guess, but it's a good trade. W trade down here as well. Order block, break structure, touch the order block, and bam, we go straight up. This would be a good trade as well, but I only trade once a day, and then we target these highs. This would be a good trading day. If I didn't take the first one because I didn't like the way liquidity wasn't swept, I would have definitely taken this one. We swept liquidity, break structure, retouch the order block on this move, touch it, stops right there, targets probably here, 1.95. Just bump it up to 2. Probably bump this up to 2. Damn. So I mean, it's more likely that I would have skipped this trade and taken this one. So I'm gonna put this second one into my notes. August 13th, 2025. Win the trade. 1 to 2.05 R&R. 2.1 to 4.3 pips. Okay, August 14th. Let's see what that brings us. Okay, we're bearish. We got these highs here. This resistance comes down. Price touches back into it. Bam, bam. We don't like this order imbalance, so we're not considering that an order block. We have this black to green. So here's the order block. Here's the swing high or swing low. Price creates a low, break structure, does not retest the order block. No trades there. I mean, is this a trade? Black, black. Break structure, retouch it. Aiming for these highs, stop here. Would have been a good trade. But is there a point where we can see that it sweeps liquidity? Well, resistance off these highs. That wouldn't have been bad. But realistically, I probably wouldn't have taken that. No trade. August 15th. Let's see what August 15th has. Okay, this looks nice. Yeah, I remember this trade. I think we won this trade on Euro. Okay, what happens? Here, order block here. Price breaks structure with the wick, retraces into the order block. Stops at the close of this green candle. Target probably just the 1 to 2, because I would target these. So take profit 1 at 1 to 2, take profit 2 at these lows, take profit 3 at these lows. Which, do we even hit? Oh yeah, we do. That's a good trade. That's a beautiful trade. I like that. August 15th, W trade, 1 trade. 1 to 2 RR, 1.9 to 3.8 pips. But this is one of those trades. I watched the video on this #1 scalper, Fabio Vincini or Vinciniti or something like that. He's like some Italian scalper, and he's a big order flow guy. Accumulation, absorption, points of control, volume-based indicators like the ones I literally have up here. He uses lots of footprints, volume profiles, and the VWAP also as well. Auto anchored volume. Was that the VWAP? What? I'm not allowed this indicator. Well, fuck you, because I got this one right here. Even better. I guess not. I don't know. I don't know what the fuck's happening. I was just using this the other day. What? Auto anchored? Was that VWAP? I think I meant to heart, or I mean favorite the VWAP or one of these VWAPs. Wait, what? Oh, it's because I already have 5 indicators on the chart, bro. Fuck. But yeah, anyways, we're getting off topic. So what he does is, why was I even talking about him? Oh yeah. He puts his executions, his trading plans into classes, into different classes. Class A setup, Class B setup, Class C setup. So for us, what's a Class A setup? We break structure, we close break structure, we touch an order block, we create equilibrium, we fill a fair value gap. That's Class A. Class A, we risk 6%, let's say. Class B setup. Class B setup. We break a structure, we come in, we touch the order block, and then what happens? That's it. We might fill equilibrium and we might do fair value gap, but not both, because then both would be Class A. This is just coming off the top of my head too, just ideas. Class C setup. We wick above a breaker structure, like right here, 2% risk on these. Then touch the order block, and then make our trade. So that's 2% risk. So like on something like this, Class C setup, 2% risk. And yeah, that's a good way to help our dollar setup. I'm gonna write that down. Put trades into class setups. Class A, we have break of structure close plus 3 confluences. Class B, break of structure close plus order block. And Class C, wick break of structure plus order block. That's good. That's good shit. I like that. August 15th. $11:30. 12:30. I'm gonna take a piss real quick. All right. I'll be back in a second, guys. I'm staying hydrated. I'm back. Hopefully nobody heard my piss dropping in the toilet. Let's see what kind of setups we got here. Okay, so bam, sweep, sweep this high. Start swing low here, order block here. We close above it. Create a fair value gap. And hit equilibrium. So we break structure, don't create a high, come up, hit our order block, and then what do we see? A breakaway for a value gap. Oh my god, beautiful class A trade. Stops the open of this green candle, take profits, these lows, take profit 1, bottom of this imbalance, or take profit 1, just a 1 to 2 right at the bottom of this. That's actually perfect. Take profit 2 here, almost a 1 to 4. That's just fucking amazing. I mean, look at that, bro. Class A setup. It's perfect. The only thing that's missing is maybe a bearish bias. Because I don't like how this kind of all this consolidation here. If this low, this low, if this bearish candle right here was connected to this one, this would be a beautiful class AA, AAA setup. This is a beautiful setup. How many pips is it? It's only a 2.2 pip. Fucking scalp. Look at that scalp. It's tiny. But beautiful trade. I like that. That's probably between a class A and a B. Just because it hit all our confluences, but it's just the bias wasn't there. So yeah, but I'd probably take that trade. So what day is it? August 18th. I was just writing that down. 1.1 to 2.2 pips. Okay. Let's go to August 19th. $11:30. It's 12:30. 11:30. Oh, it's one of these kinds of days. It's good for a trend trader, but as someone who looks for sweeps and shit. Okay, so what happens? I mean, touch these lows. Probably would have seen this as a liquidity sweep. So what do we do? Create this swing high, this order block. Price breaks structure up, touches the order block, and then just bam, breaks through. What kind of setup trade is this? Hold on, I gotta go fix something upstairs real quick. I'll be back. Okay, what kind of setup this is? Class B setup. Okay, we closed above, broke structure with a close, came down, touched equilibrium, filled my order block, and what happens? Okay, stops at the bottom of this wick. Target. First one at these highs here. Second one, these highs. So 2.42 risk to reward. 1 to 2.42 R&R. 1.2 to 2.9 pips. So basically, this is what we want with our classes, right? Class A setups, they need to win like almost every time. Class B setups, maybe 50-50, and then Class C setups like 25% of the time. Well, also 50-50. I'm gonna say Class B should be like 75%, maybe 50%, probably 50, and then Class C maybe a little less than should be 50-50 as well, but it's just less risk. So that's August 19th. Took a L. Kind of liking the way that price forms on GBP. I feel like it's a lot less manipulation. It follows the rules more, but maybe that's something I need more experience with. I should have wrote down like how I felt the manipulation was every trade for Euro USD. I might do that for this one. I don't know. It just feels a lot smoother. Feels like I can breathe. Oh, this is that one trade. Actually, no. I don't know. Okay. What happens with price? Touch this all-time low. Well, not all-time low, but long-time low. So come down. Okay, this order block, this break of structure. Forms new high, new high, new high. Doesn't break structure, or it does break structure on a new high. Breaks structure on the old high. Comes down, touches the order block. This isn't an equilibrium trade, because I'd consider equilibrium from here to here. So we don't fill equilibrium, no fair value gaps, but we do still close above here. So Class B setup, okay, close, fill. Would we count this? I feel like I don't like all this price action before here. I mean, I know the trade goes good. Where would I put my stops? Here, here? Because I feel like price, it might not like disrespect me if it comes all the way down here, but do I really want to put my stops here? I don't know. I'm trying to think. Would this be something I would take? Because I would see, look, bearish trend, consolidating, right here, consolidation, and then bam, down. I don't think I'll take this. I'm putting no in the books. August 20th, 2025. No trade. Let's check the 21st. See what's going on. And then the 22nd is the last day of trading. So 11:30. What happens? Price comes, touches these highs. This low, this order block, break structure down, does a retest it. Actually, hold on. Wick here, wick break structure, retest the order block. Here's a Class C setup. Class C setup. Bam. Here, stops, top of these wicks. Take profit. I mean, the bottom of this imbalance here, but I mean, that's not 2-to-1. Probably just target a 2-to-1. And then could also target down here, but that's a big move. So Class C setup. Yeah, no equilibrium. We don't feel this fair value gap here. So Class C setup, 2% risk. Hit it though. Consolidates, bam, down. It's W trade. And I normally don't speak W trade. I don't say W trade. It's just when I say one trade, it sounds like I'm saying one trade instead of I won the trade. So I say W just so, because it's a W. We won. 1 to 2 R&R. But I just fucking hate people who talk like that, bro. Like, they're so fucking weird, man. 1 to 2 R&R. 3.1 to 6.2 pips. All right, last day of trading would be August 22nd, 2025. Let's see what happens. I'm liking GBP though. We are winning these trades, man. Maybe it's just a good week. We never know, which sucks. But so far, if you held me at gunpoint, you made me choose. I'm moving to London. Okay, what happens? Lows, get sweeped. Don't have any good fucking order blocks or any swing highs. Nope, nothing here. Have these highs. Comes in, touches, black, green, order block, break structure, touches it again, comes down, hits these lows, and then we get What do you think? Should I write that down as a win, or should I say no trade? Do you think, would I take this trade? Let me see. Price trending up, it's holding down. We see this big black candle, comes up, touches it. Price kind of shifts around, and then bam, hit our TP in one candle. We hit an all-time high, or a long time high, coming down, retracement, down, retracement. I think I would take this. What kind of setup is it? It's a class B setup, because we don't fill a fair value gap. So 4% risk, and we won. If we targeted any lower, it would have been stopped out. So one trade, 1 to 2, 2.23 on our uh, 1.3 to 2.9 pips. Okay, I'll be back. I'm gonna grab some food before we switch to USD JPY. Give me 1 second. Okay, so out of 10 trading days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 2, 4, 6, 8, 10. I won. So out of 10 trading days, I took 1, 2, 3, 4, 5, 6, 7, 2, 4, 6, 7. Out of 10 trading days, I took 7 trades. And out of those 7 trades, I won 1, 2, 3, 4, 5, 6. I won 6 out of 7 trades. That's fucking good. 6 out of 7 trades. 1, 2, 2 out of 3 trades. 1, 1, 2, 3. 2 out of 3, 1. 1, 2, 3, 4, 5, 6. Sorry, I keep recounting because I just want to make sure I really. That's a really good win rate. Let me check the. It's a win rate of 85% win rate. Oh my god. That's just amazing. And that's with more trades too. It's easier to get a higher win rate with less trades because whatever. One, two, three, four, five, six, 7, 8, 9, 10. Man, GBP, you have my heart. So where are we going now? USD JPY. See what's going on here. I also took some trades here. I wonder how many of the same trades I've taken already that I've already tested. How many? I have 15 drawings. Okay. All right. $11:30, $12:30. Okay, let's see what August 11th brings us. Yes, sir. Okay, so what happens? We have these highs, price breaks through. I also have these lows here. The price retraces into, but we don't like that. We're kind of in a downtrend. I wouldn't go on an up, even though it looks like, I mean, nah, a trade wouldn't have happened here. But look, let's look here. This is like the same trade I took already every day because I remember this one. Let's just see if price action here was any better or worse. What happens? Price comes up. We don't have a swing low. Okay, here's our order block. Here's our swing low. Price breaks down, doesn't retest it, comes down, tests this level, bounces off it, fakes out some people, breaks down. No trade here would be taken from me. No trades taken. Man, I'm not liking this price action right now. It looks very, very trendy and very imbalanced. Like either sellers or buyers have controls. Because look, a lot of the candles don't have 2 wicks. A lot of them just have 1. Here, 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 1 or none. So far, not a good start for USD JPY, just off what I can tell from the candles. But it's only 1 day. So August 11th. No trade. August 12th, 2025. Let's see what you bring us. I mean, what the fuck is this shit? Thankfully, we trade little after all that opening action. Let's see, we touch a new low, a long time low. Do we? No, we don't. It's only a day. Sweep this liquidity. Sweep that. What happens? Up. Here's the upswing. Here's the order block. What happens? Break structure up. Retrace here. Hit equilibrium. No fair value gap. Class B setup. Break structure. Enter. Off of this order block. Bam. Targets. These highs. Stops. Probably this wick. 1.62 risk to reward. Maybe we aim for the top of this imbalance here. 2.11 win ratio. Or I mean ratio. W trade. 1 trade. What kind of risk to reward was it? 2.1 to 2.11 RR. 5.5 to 11.6 pips. August 13th, 2025. What you got for us? So far, I'm liking GBP better. It's just, this seems like a very dramatic currency. Look how blocky it moves, like, I don't know, very choppy. Highs here, we get sweeps. What happens? What happens up here? Would I take this trade first? Lows, swing lows. There's no swing highs to base our thing off of other than here. Break structure. Don't break structure up until here. Then retest. Open, probably wick above. Come down, retest for order block, break through. But I don't know if I might have taken this trade. It's actually a decent trade. Would I have taken that? I mean, up probably would have had a bullish bias. But this looks like a retracement. Like, it looks like this is about to go further down. You know what I mean? So here's our swing high. We wick above it. Well, there's a reason this would be a Class C setup, man. This would be like a Class D setup. Nah, I wouldn't take this trade. Because we wick above, break even, then touch our order block. Then come up, hit these highs, which is good. But, nah. This one, though. What happens? Comes up. Comes up. Create these swing lows. This order block. Price breaks structure down. Comes up. Fills our order block. Stops. Where would I have my stops? I feel like I'd have my stops like right there. Like I would have gotten stopped out. 1 pip. Look, if this came up and this closed like over here, I probably, well, I would have put it in the middle of this wick some here. I would have got stopped out. And then just a 1 to 2. And then there's also this trade. I don't know if I would have taken this. I mean, this is, I guess something you wouldn't know until you're here. Until you're here in this situation. But we do bounce off of these lows perfectly. Man, I don't know what to say. Would I take this trade? I mean, this is a Class C trade. We hit its fair value gap. Hit these lows. I might have taken this trade. See, price consolidates. Bam, break up. Break structure. Retraces. I probably would have taken this. I would have, if I didn't take this, I would have tried to take this and lost. So you know what I'm going to say? This is a break-even day. I can't decide. Because I won one and I lost one. I'm going to just say break-even. Okay, August 14th. Okay, we're in an uptrend. Price bounces off these lows. Up, down. This swing high, this order block. Break structure, retraces. Retraces. Bam. Break structure here. Here's our order block, which we fill. Fill this order block as well if we wanted to say that. Stops, the close and opens of those. Targets top of this, probably around here. For perfect 1 to 2 is right here. But I realistically would have tried to hit like here. Let's see, what do we get? Past equilibrium. It's a Class B setup. Comes down, barely gets stopped out, and finally break through. Okay, I just wrote all that down. Let's check August 15th. I gotta go take another piss. I'll be back. Back, locked in, pumped up. Let's go. August 15th. What kind of trades is USD, GBP, GDP, fucking whatever giving us? Let's see. Okay, so don't sweep liquidity here. Do we break structure? Might have tapped into it, broke it. No, nothing. Yeah, no trades taken on this day, probably. Here, hold on. I might have been faked out. Nope, I don't think I would. I would if I could. Come down. There's no swing lows. These are the swing lows. Nothing. Nope. Nothing. Nada. Maybe this right here, right? Black. Green. Low. Up. Break structure down. Fill this fair value gap. Oh, I might have taken a loss here. What do we think? Here we come up, we sweep this liquidity, create this low, this green candle order block. What happens? Price break structure, comes up, retest the order block, bam, liquidated. Would this be something I would take? I don't know. All I know is that I'm not really liking what USD JPY is looking like. I might just have developed the bias though. I think I did. I think that's what's happening. I just developed a fat bias for my JPB. But yeah, I'm gonna write this as a trade I would have failed for sure. Probably would have got baked here. So the top of this, and I probably would have just targeted bottom of here. So August 15th, we hit a loss. Is this the same loss that I took on Euro USD? Yeah, it is. Well, it's good that at least I'm developing patterns for the same days, because then it means I'm not lying to myself about what trades I would and wouldn't take. So, lost trade 1 to 2.31 R&R, 1.6 to 3.7 pips. We lost that shit. Okay, August 18th. $12.30, $11.30. This might have been some action I might have taken here actually. So we got this swing high, this order block. What happens? We break structure, come down, fill our order block here, and then what happens with price? I might have been stopped out before anything good happened. Let me see, my stops would have been these, target, just the two. But is this a liquidity sweep? Could be bouncing off of this imbalance here. These lows. These lows. Breakaway for value gap. Right here. And bam. This closed above this wick, so I would have brought my stop. So it's a break-even trade for the 18th. For a class B setup, it looks like. Yeah. Would have hit it over here if I waited for this. Actually, probably wouldn't have. So break even trade 1 to 2 stop 1 to 2 1 to 2 R&R 2.3 to 4.6 pips. Look at this. All these highs getting taken out. What do we create? This low. This order block. Boom, boom, boom. Bam. Price opens. Almost wick the breaker structure. Then retrace to the order block. No fair value gap, and then we shoot down. Breakaway fair value gap over here. And class C set. Wouldn't have taken it though. So okay, let's see if the 20th does any better. 20th, we got 11:30, 12:30. What do we do? So we got liquidity here, maybe. Nah, this ain't liquidity. I wouldn't do this shit. There's no way I'd be dumb enough to do that shit. This is liquidity here. So we come up, sweep liquidity. All this liquidity here. Almost hit this top one. Come up, order block. Create our swing low. Create an order block. What does price do? It breaks through, closes above it, doesn't retest. Closes, nope, nah, no trades here. No trade. August 21st, 2025. This is similar to Euro USD because a lot on Euro USD, the last 5 days I didn't take any trades. And then the one I took on August 18th was, I don't know if I'd consider that like high probability that I would actually have taken that shit. So this is trading similar to my stops and wins because I didn't. So no trade, win, break even, win, loss. No trade, win, break even, loss. So I lost one and didn't take a trade on the same days. And then break even and win days where it's flipped around. And then no trade, no trade, no trade, no trade. And right now we're on the 21st. Just didn't take a trade. And then here's this crazy day from last week. Or last whenever. I think that was the first time I hit 11:30 and 12:30 perfectly. Okay, August 22nd, 2025. What kind of price action do we have here? Okay, so what do we do? Break structure, don't hit this low until here, until we create a new high, break structure back up. No trade taken here. Oh my god, this price, look at this. I mean, it's just up, down, up, down, up. It just doesn't look good, man. It looks like ass. Well, we got this low, up, bam, create this order block, this swing low, this order block. So price breaks through, creates a high, then retest the order block, disrespecting our execution plan. Here, there's not even a swing low that we can count. So we touch here, don't retrace it until another swing high is touched, bam. No trade. No trade. So let's calculate that R&R. 1, 2, 3, 4, 5 trades taken. 2, 4, 5. Let's calculate the R&R. Okay, so one, two, three. 2 out of 3 trades won. 2 out of 3 trades won. %40 win rate with break even. 40% win rate with the break evens. And 66% win rate without the break evens. Что, Дуси? One, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay. Euro AUD.